Throughout human history, the better civilizations have stood on the gold standard, and economists have always tried to create the perfect money. Gold was the closest thing to perfect money, but it was always imperfect because you could mine more gold, and it's centralized. It was easy to steal gold, and it was very slow to move. It would take a year to move gold. So there was this dream in the economic community of perfect money, and it was impossible to create perfect money or clean, sound money until the invention of the internet, combined with the invention of public-private key cryptography, combined with the invention of semiconductors. And so Bitcoin represents the engineering of perfectly sound money.
The year 2024 has begun with considerable enthusiasm for cryptocurrencies, particularly Bitcoin and Ethereum, which have captured the attention of investors and enthusiasts alike. As of October 16th, Bitcoin is trading at $67,043, reflecting a robust market capitalization of $1.33 trillion. In the last 24 hours alone, Bitcoin's value has risen by 2.61%, while its weekly and monthly gains stand at 7.59% and 14.39%, respectively. Earlier in the year, Bitcoin achieved notable milestones, surpassing its all-time high of $69,170 on March 8th, before climbing to $70,083. This upward momentum continued, and by March 14th, Bitcoin had reached a new peak of $73,750, driving its market capitalization to $1.44 trillion and contributing to a total cryptocurrency market cap of $2.77 trillion. Such peaks highlight Bitcoin's potential for value appreciation and underscore the growing interest in the broader crypto ecosystem. Although Bitcoin experienced a downturn after these highs, it has bounced back significantly in recent months, reflecting a recovery of approximately 140.82% over the past year. Bitcoin's current trading price of $67,129 and a market cap of $1.32 trillion indicate a strong recovery trajectory that could set the stage for future growth. The development of Bitcoin can be viewed as a pivotal moment in the quest for a more reliable form of money. Michael Saylor, executive chairman of MicroStrategy, has long advocated for Bitcoin as a solution to the challenges posed by traditional monetary systems. Emerging from the innovative synergy of internet technology, cryptography, and semiconductor advancements, Bitcoin was introduced by the enigmatic Satoshi Nakamoto in January 2009. Its design includes a fixed supply of 21 million coins, which safeguards against inflation, and a transaction processing frequency of approximately every 10 minutes. This decentralized structure enhances security and mitigates the risk of central authority control and censorship. If you want to stay updated and understand what the top Bitcoin and cryptocurrency investors and leading thought leaders of our time are thinking, don't forget to hit that subscribe button and turn on post notifications for more videos like this.
Throughout the history of the human race, of sound money, of money with integrity, something you could trust, something that you could store your life savings in and not have debased or destroyed or stolen from you. And that sound money took the form of gold after about 5,000 years. And throughout human history, the better civilizations have stood on the gold standard. And economists have always tried to create the perfect money. Gold was the closest thing to perfect money, but it was always imperfect because you could mine more gold, and it's centralized. It was easy to steal gold, and it was very slow to move. It would take a year to move gold. So there was this dream in the economic community of perfect money, and it was impossible to create perfect money or clean, sound money until the invention of the internet, combined with the invention of public-private key cryptography, combined with the invention of semiconductors. And so Bitcoin represents the engineering of perfectly sound money. And it was only possible once those three technologies advanced. And there was a group of cypherpunks that were playing with cryptography, playing with the internet, and they saw the development of hashing algorithms like SHA-256 and the ability to build that into an application-specific semiconductor. And they probably tried this 40 times. There were products like Hashcash and digital gold and BitGold and things like that. And the first 30 or 40 of them failed. And then after about 40, Bitcoin came along, and Bitcoin learned from the failures of the 40 before it. And it was the first truly decentralized crypto monetary network. And it was lucky because it just had the right monetary policy, which is absolute scarcity, 21 million. And it had the right frequency, a block every 10 minutes, the right bandwidth, the right protocols. And, when it was launched in January 3rd of 2009, did we know it was perfect? No, nobody knew it was perfect. In fact, it didn't trade for a year and a half almost. And the first time it was used for transactions was Pizza Day around May of 2010, where somebody bought 2 pizzas with 10,000 Bitcoin. So at that point, 10,000 Bitcoin, $700 million worth of Bitcoin was traded for 2 pizzas.
Yeah.
And then people thought, well, maybe it's something, but it's still kind of a hobby. And it took another decade before it wasn't a hobby.
Well, and
hence,
you also had
a crypto
people...
network comes to life.
As global economic uncertainties rise, many individuals are witnessing their purchasing power diminish, prompting them to seek alternatives like cryptocurrencies. This situation is exacerbated by geopolitical tensions, such as Russia's recent actions, which have discouraged the use of dollars and credit cards, creating a complex landscape for global currency dynamics. Amidst this backdrop, Bitcoin is emerging as a potential solution, with questions about whether it could become the world's dominant currency and its implications for U.S. hegemony. Michael Saylor argues that rather than undermining the U.S. dollar, Bitcoin could actually strengthen it. He emphasizes that the dollar remains the world's strongest currency, with many other currencies either collapsing or closely tied to the dollar. Although the dollar faces inflationary pressures, Saylor suggests that the true rate of monetary debasement is better understood by observing the performance of the S&P 500 index. He posits that investments must exceed the index's growth rate to maintain value, highlighting that many traditional investments may underperform in comparison. By presenting Bitcoin as a form of digital gold, Saylor emphasizes its potential to serve as a store of value, especially in times of crisis.
If you look at all the currencies in the world, the strongest currency in the world is the dollar. And so everybody in the world has either got a weaker currency, which is collapsing, or they're on the dollar standard. Like the euro is pretty much pegged to the dollar, the Singapore, the DROM, most of the quote unquote good currencies, the Swiss franc, et cetera, they're pretty much pegged to the dollar. And then the bad currencies, the weak currencies, the peso, the naira, Egyptian pounds, Lebanese pounds, Turkish lira, they're collapsing against the dollar. So it seems pretty clear that the dollar will continue to spread. But there is an inflation problem. The inflation rate in dollars is not the CPI. It's not 2 or 3%. The best way to think about monetary debasement is to look at the S&P index. If the S&P is advancing 12% a year, that's the rate at which the money supply is expanding in dollars. So your hurdle rate, the rate at which you have to generate an investment gain in dollars in order to not get poorer, is probably the S&P index. That's the cost of capital. And that's a pretty good surrogate for the rate of expansion of the US dollar M2 money supply. So over the last 100 years, the S&P index generally expands about the same rate that the dollar expands in money supply. So if someone gives you an idea to generate 3% after tax, buying bonds at 5% that are 3% after tax, that's kind of like underperforming the cost of capital by 9%. You're getting 9% poorer every year. So anything that isn't beating the S&P index is making you poorer in dollar terms. What's beating it? Well, the S&P, when you invest in the S&P and your money goes up 10% a year with the S&P, you think you're getting richer. No, you're just staying rich. You're staying as wealthy as you are. The Magnificent Seven's beating it. So over the last 4 years, maybe the S&P's up 13, 14%. The Magnificent Seven's up 25, 26%. It's doubling it. This is a no-brainer. It's obvious, right? NVIDIA and Apple and Google and Microsoft and Meta, those are monster stocks, and everybody knows they're the most powerful companies in the world. So they outperform. Everybody else in the S&P underperforms. So 1% of the companies generate most of the gains. The other 98, 99% don't really generate much gain. Bitcoin's doubling the Magnificent Seven. So in terms of is Bitcoin the answer? Yeah, sure. If you want to beat the S&P index, you need something better than a typical good company. A well-run company will at best keep up with monetary inflation. You need a monstrous digital monopoly like the Magnificent Seven to outdo it. But the greatest digital monopoly in the world, Trish, is the digital monopoly of money. I mean, the greatest digital network in the world is Bitcoin. Bitcoin is Facebook for money, right? It's Google for money. If all the smart, rich people in the world decide that they want to store their money in a bank in cyberspace that will never be debased and hold it for the next 100 years, right? Isn't that the best investment by definition? Because every other company has some kind of crack in its armor, some kind of attack surface. All the other companies get taxed. They have employees, they have headquarters, they get hit with tariffs and fines and et cetera. So find me a big tech monopoly that is global, that sells a product that everybody wants, nobody can stop,
it's you.
and
It's
nobody
MSTR.
understands.
Given Bitcoin's cyclical nature, there is a strong belief that 2025 could mirror past years in terms of price performance. Historically, Bitcoin has shown robust growth toward the end of the year, with substantial gains in the months of October, November, and December. If this pattern holds, Bitcoin could exceed the $100,000 mark, driven by increased demand as the supply continues to shrink. As a result, the market is bracing for a possible surge in the coming months, with some predicting a significant rally by year-end. Another potential catalyst for this surge could come from the U.S. Federal Reserve's decision to cut interest rates. Lower interest rates typically push investors toward high-growth assets like Bitcoin, which benefit from a weaker U.S. dollar. While there are no guarantees, Bitcoin's fundamentals remain strong, and its decentralized nature continues to attract more institutional interest. Share your thoughts in the comments below. Also, ensure you like this video, subscribe to the channel, and if you want to know more about how government policies are impacting Bitcoin and other cryptocurrencies, then you have to watch this video next.